Hi everyone, welcome aboard to our YouTube channel Fresher Platform Global, particularly BCom pursuing and pass outs. And this is session 4 and 5 of Financial Accounting Expert training. And this session deals with transaction occurrence or the different phases of transactions and accounting life cycle and transaction flow. The occurrence or phases or life cycle of transactions are divided into three stages or three parts. One is daily transactions, and the second one is monthly, and the third one is yearly. These are the three phases of the transactions, like how they occur. Daily phase refers to the daily transactions which are recorded quite oftenly, or the periodicity or the frequency of those transactions is quite often. If not daily, they occur quite often, like purchase, sales, purchase returns, sales returns, delivery notes, material receipt note or goods receipt note, cash and bank deposits, cash and bank withdrawals, cash and bank payments, and cash and bank receipts. These are the daily transactions. And the second one is month ends or periodic or accruals or adjustments. They are one and the other names of the adjustments. Like there are two specific words, one is periodic and one is accruals. These two words are not known by the BCom students. They know month ends and they know adjustments, but periodic and accruals are very specific words which are used in the market. Like different businesses also use these words. And as far as accruals is concerned, the definition of accruals is expenses incurred but not paid, and the incomes earned but not received. This is the definition of accruals. And why adjustments are done? There is a purpose, like why the adjustments are done at the end of the month. The adjustments are done to make sure or to know the clear status or the financial status of the business on the last day of the month, like what is the net profit or net loss, and about the position statement or the balance sheet, that what are the assets and what are the liabilities at the end of the month. Or the adjustments, or you can also understand it as the adjustments is the adjustment of past tense and future tense with the present tense. Okay, the adjustment of past tense and future tense with the present tense. For example, salaries account. We'll take the example of salaries account. Like salary advance is generally given in the initial month. Okay, when the month starts, like 5th or within 10th of the month, the salary advance is given. And the second one is like salary account, which is in present tense. Salary advance is in past tense. Okay, and this the present tense is something salary account, and salaries outstanding or payable is something future tense. So these are the three things which are adjusted, okay, at the end of the month with the present tense, that is salary account. Okay, so salary account will be shown in the profit and loss account, and the outstanding salary will be shown in the liabilities. Okay, and whatever the salary advance was given, it was debited earlier, and at the adjustment or on the last day of the month, the salary advance will be credited. So these are the different adjustments which are done on the last day of the year. And expenses incurred but not paid, and incomes earned but not received. This is the definition of the accrual. Okay, and the last one is year-end adjustments. The year-end adjustments are something, they are the same adjustments done on the last day of the month, but these year-end adjustments are done on the last day of the financial year. Okay, that is on March 31st, with reference to Indian statutory taxation. Okay, in other countries they are done on the 31st December, but in India it is 1st of April to 31st March is the financial year or the accounting year. So this was something about the year-end adjustments. And as far as accountancy or accounting and the data flow and the life cycle of transactions is concerned, we'll understand here in this slide. And accounting refers to the recording of transactions in the books of accounts. That is known as accounting. It deals with only the recording part, that is journalizing. Accounting means journalizing. But whereas the accountancy refers to the whole accounting life cycle. Okay. So accountancy means recording, classifying and summarizing the business transactions which do have a financial character and expressed in terms of money and interpreted to the reports are interpreted to the management, the results or the reports. This is the definition of accountancy, in which all the life cycle will fall. Recording, and after recording the transactions, we will post the transactions to the corresponding ledgers. That is what is known as classification. And after posting to the ledgers, the trial balance is prepared, or the trial of all balances will be checked. Okay, one is unadjusted trial balance and the other one is adjusted trial balance. Adjusted trial balance means all the adjustments are done, then the trading account, profit and loss account and balance sheet will be prepared. Okay, so this is how the accountancy or accounting life cycle can be understood. And as far as data flow of transactions is concerned, the data flow means the transaction flow. Transaction flow is something like the transaction is recorded in the journal, and from the journal the transaction will flow to the ledger. But after the ledger, the transaction will not flow. Only the ledger balances will flow from the ledgers. Okay, so the data flow or the final destination of the transaction is ledger, or you can also say the permanent place of the transactions is ledgers. Okay, so this was something about the data flow or life cycle of transactions. And till now what we have understood is the complete life cycle of transactions, or the 360 degree of transactions was discussed in all these 5 sessions, and we have understood everything about the transactions. And that's all for this session, guys. Thank you so much for watching our YouTube channel, and requesting you to like, share and subscribe our channel with near and dears. And our next session deals with the journals. And have a wonderful day, guys.